What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on BABA stock.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on a price chart and how we get there. Then I will continue with the fundamental news and I will show you why we have this harsh movement to the downside. And during this movement, BABA lost about 22% of its value. And I will show you another very good news directly related to this company, and that might be a long-term catalyst for Alibaba. And at the end of this video I will share my thoughts and my technical analysis, and I will show you what should we expect next. And before we get into all of that, if you guys would like to earn 2 free stocks with Moomoo valued up to $7,000, please check out that link in the description below. All you have to do is sign up for an account and deposit as little as $1. This is guaranteed free money. Full details you can see on the screen right now. So let's start with the price chart. I made my previous video right here at this point, and I've told you that despite the price target that I set previously, and we had this range of 0.786 at the price point of $132.24 as the medium-term price target. At this very point, I've told you that most likely we should break these ranges of supports, and we might hit even $104 mark. And as you can see, it happened. It happened exactly as I predicted. And this was the most probable outcome for the price action, because from the technical standpoint, we had multiple signs that this asset is losing its momentum. And because of this, the probability to hit this range of $132 was very insignificant compared to the movement to the downside. And as you can see, we broke even $104, but retested from the bottom as the resistance, and this might be another sign that this asset might go even lower. And because of this bounce to the downside, we almost hit, and basically I have to say that we hit the double bottom pattern with this previous swing low. And I have to say that this volume shows some bullish signals, but I want to warn you because we are not out of the woods. And more details you will see in my technical analysis. But for now, let's continue with the fundamental news. And let me show you why we have this harsh movement to the downside. So, we are on motleyfool.com, and this article was published, let me show it to you, on July 15th, and it's titled, Why Alibaba Stock Cratered This Week. And the key points are following. Alibaba found itself in the gaze of regulators not once but twice this week. 3 measures of China's economy show a deteriorating landscape. Slowing sales in Alibaba's 2 biggest segments paint an ominous picture. And let me quote you this information in details. The stock got hit coming out of the gate Monday in reports that Alibaba was one of the several companies to be fined for regulatory violations. And I have to say that the fine by itself was not so big. It was about 2.5 million yuan, roughly $370,000. And I have to say that Alibaba generated the revenue of $134.5 billion last year. So the fine is a drop in the basket. However, drawing the continuous gaze of China's government watchdogs is never a positive development. On top of that, we have this very bad news. We had this very bad news that was the main reason why Alibaba lost more than 20% of its value. And let me quote you this. Things went downhill on Thursday as the word broke that executives from Alibaba's cloud segment had been called to appear before Chinese authorities in Shanghai regarding a massive data theft that was uncovered in June. Information about nearly 1 billion Chinese residents was compromised and offered for sale online for roughly $200,000. An investigation revealed that the data which was stored on Alibaba's cloud had been unsecured for more than a year, allowing hackers to access and ultimately download the information. And definitely, when you can see this news related to breaches in anti-hackers defense, and if these breaches was opened for a long period of time, definitely this news is negatively affecting the price of the company. And that is why we have a massive downturn. Next one. You know that Chinese economy showed that macro conditions deteriorated further, recording its slowest growth rate in more than 2 years. The country's gross domestic product grew at just 0.4% year-over-year in June, far below the 1% growth forecast by economists. the results were even worse on a quarter-on-quarter basis, falling far short of the 4.8% it generated in the first quarter. The worsening economy is being further exacerbated by near-record unemployment and surging inflation. And because of this news, we can see this harsh sell-off. And I have to say that it is not the good sign in general, but in my opinion, this movement won't last for a long time because it is quite short-term catalyst, and definitely we might see some kind of bounce in upcoming sessions. And let me show you some bullish news directly related to Alibaba. On marketbeat.com we have a new rating that was published on July 11th, and it is the rating from the Goldman Sachs Group. And Ronald Keong boosted the price target of Alibaba, and he boosted the price target from $163 to $167. That implies 52.4% of upside potential for the next 12 months. And I have to say that we have more and more companies that boosted its price target. As you can see, 3 latest filings boosted their price targets. And I have to say that it is quite bullish sign overall that shows that potentially Alibaba might already hit its bottom, and that's why this asset becomes even more attractive for the long-term investors. And let me show you what Ronald Keong said. Keong adjusted the rating in a research note about the internet sector in China, and Keong is positive on the company's multi-flywheel platform taking shape after offensive and defensive moves from the company to address the rise in China's e-commerce competition. And Keong pointed out that Alibaba's upsized share repurchase program demonstrates management's confidence in the company's long-term and sustainable growth potential and value creation. Definitely, this is a very good forecast and very good upside potential for Alibaba. This means I have to say that probably the lowest points right here, and even let me show you right here, the lowest point, the all-time low, might be the bottom of the price action for Alibaba, and definitely this might be the beginning of new uptrend. So, and let's continue with the technical analysis, but before we dive deeper right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, what should we expect next from the price action? I have to say that we reached this previous swing low as the double bottom pattern, and from this range we have a very good bounce. Let me show you more thoroughly this movement. We have a very good bounce to the upside with a decent volume. As you can see, the volume is almost the highest one. And definitely this might be its lowest point, at least for medium-term perspective. And what should we expect next? If you are risky enough and if you want to enter your swing trade long position, I have to say that on the retracement, when we will see some kind of movement to the downside, you will be able to enter your swing trade long position, but you should put your stop loss slightly below this bottom, because it is the crucial point right now. And if this asset breaks this range of about $97.82, definitely we will invalidate this movement to the upside, because right now we have probably, this is our 5 waves, that implies only one wave on a greater scale. This is the second wave to the retracement, and this might be the beginning of the third wave. And definitely the touch of this initial bottom is not the best sign from the bull standpoint, but we still have the possibility to hit some higher targets to make a bounce from this bottom. And this means if this asset breaks this range to the downside, it will invalidate this movement as the motive wave, and it will confirm the ABC correction that has an extension in the B wave like this, and we have to land somewhere lower, and this retracement might be huge. So that's why just be cautious, and if you want to enter, just enter your position on the retracement and put your stop loss slightly below this range. And what might be the target, short-term target for this asset? If I pull the Fibonacci retracement retracement tool from the top of this range, as you can see from the very top right here, to the very bottom, we might hit two ranges. First of all, it is 0.236 level at $104.62. Then, less probable but still possible, 0.382 level at $108.6. And depending on the entry point, and you might enter somewhere at the range of about $100, you might gain about 4% to the first target and about 8.2% to the second target. Definitely it is not the most lucrative trades, but the downside potential for this trade is not more than 3% and the upside potential is almost 9%. This means the risk to reward ratio is quite affordable, and this means you might enter your position to catch this bounce. So I think from the technical standpoint that's it for now. If you like my video, please hit the like button and subscribe to my channel with notification bell, and see you guys and girls next time. Bye!
I got the cash in the bag, stadium